Thank you to Traders Talk for setting up the event. And we're going to make it exciting for you. If you have a pen and paper, take some notes, because you know, going afterwards through 4 or 5 hours of presentations, that's a little bit of a challenge. Let me go full screen here. And so therefore, what we share here in our presentation, system and behavior requirements. Yeah, it takes both. It takes a good system to make hay in trading, and also it takes the right behavior. And we're going to address both, and you'll be better on if you consider both in your future way of trading. Surely we also make you an offer, but on the other hand, we want to use the education service here, sharing with what we do, how we do it, and we'll give you also examples of how we trade to help you move forward, because you need to see, it's not an easy business. If it was easy, nobody would ever go to work. The business of trading has somebody who takes the other side of your trade, and they are prepared. But you can basically work through that, understanding what the other side does, with a system that tells you what to do, when and how, and within also being mentally prepared for it. And it sounds easy, but behavior change is one of the biggest challenges we have in human life. Let me here have the disclaimer, telling you that trading has its risk, and we are acting here as educators. And the word never loss trading doesn't mean you never lose a trade. It comes from the idea that you can repair a lot of trades, turning losers still into winners or very little losers, and this is where the name came from. And never stop loss trading, because instead of a stop loss, we'll repair the trade was a little bit lengthy. Still, we own that domain. So let us dive into the details. When you see the difference between trading and investing, it's mostly time perspective. The long-term investor is ready to buy and hold an asset, and there might be a stock, an option, a future, between weeks, months, or even years, and he takes a long-term perspective. Then we got swing trading, shorter term perspective, but still you hold for a couple of days and then you turn over. And then you got your trading, opening, closing the position the same day, day trading often. But at the end of the day, all of this has the same type of behavior, just differentiated over time. And so we put that here together and say, okay, time differentiates trading and investing. However, the behavior to be a good trader or an investor is the same in some way or manner. But where is it the same? How can we help you to move ahead on both sides, the system side and the behavior side? So therefore we split it here in the chart. It looks a little bit busy. Let me zoom in. Boom. So if you look from left to right, first of all, you need to have a knowledge base. The knowledge base is the system you trade with. The system shall give you clear-cut, undisputable entries, exits, and stops. However, also you need strategies. How do I repair a trade? How do I leverage a wonderful trade situation that is strong? How do I hedge a position if things go against my way? This is all the knowledge base of trading. And then there comes the attitude, containing discipline to follow a business plan for trading success, because that's often lacking. How do you manage your risk? How do you manage your money? What do you do to prepare your trades? How can you get everything aligned so that you know what to do when the event that your system tells you is happening? Very important. Often underestimated, because then you got the indicators, but you can't get the trade home. So we need to work on both, and here take your notes to have that in your plan. And now comes behavior. The behavior of a trader or investor is usually different to all other ways of making an income. And I will go into the details and what it needs and where you need to take yourself a mental note, but also an attitude note and also a work note for moving yourself ahead, getting into a different world. Because when you see your ways of making an income, so let me magnify that. There's people who have a job, so they go to work for somebody else, and others, they own a job. What the hell is that? That is when you are, for example, a lawyer, work for yourself, or you're a doctor, or you own a business. All in these sectors here, you initiate and you make your future by building strategies, by working a little harder and moving ahead and supervising people, or by trying to attract more clients that come to your office. But in investing, there's something different. Yeah, you are an investor. When you are an investor, your behavior is different. You analyze, you clear-cut define what you want to do, and you have the tools on hand to do so, and you act when your minimum requirements are met. Think about if you wanted to buy a multi-unit rental space, you'll only do that on the base of calculation. So many days you will not get rent because it's open and people move, and at so many you get, and all of that calculated through against your interest has to make you a return. And only if that is minimum met, you're going to buy the unit, and you still know that you are acting under risk. But in trading, often people trade from the behavior. I have a job, I'm a business owner, or I own a job. It's Monday, I'll need to trade. And that's a big, big mistake. You only need to trade or invest when your perfect or minimum conditions are met. On the perfect conditions, what do? You hit for a home run. On your minimum conditions, what you do, you hit to the next base. So you see, the action is different here in these three quadrants. You are doing the job. Here you are doing the analysis, and you are defining minimum and maximum requirements or perfect requirements, and then you act on them. And we will specify those, what they are, so that you take something away besides of what we show you, what our systems do. So what is it? First of all, you have to decide for your trading perspective, time for return. If you're a long-term investor, so what return do you want to have over a specific time, and how much risk do you put behind it? Yeah, which assets do you want to trade? Are you interested in trading stocks, options, futures, forex pairs? Yeah, so these are all decisions to be made. And then, do you have a system that gives you clear-cut entries, exits, and stops, undisputable? That's important. Yeah, you need to feel and the system has to spit it out. That's my entry condition. No discussion. This is my exit condition over a certain period of time. It can be distance of a price move, or it can be time of a price move. And where's my stop? Where do I take the trade out because my conditions are not met and the thing is going against me? Or instead of a stop, never loss trading. Yeah, here never stop loss trading. How can I repair my trade by an adjustment? Yeah, so and here we come to that. Do I have the strategies? Can I hedge? Can I leverage? Can I arbitrage? When do I use an option? When do I use a stock? How do I work with futures, long-term, short-term? Yeah, so how do I put it together? Yeah, are the odds in your favor? When you compare the risk to reward, and I'll go into a couple of details that often are not considered of a trade setup, then you put it together. And you see what we are doing now? Now we are formulating the minimum requirements a trader or investor should always have on hand and decide upon. It's not because we feel the next week's the price is going to move and I'm in the market. No, my minimum conditions have to be met. Only then, and only then, will I put my money into the market to obtain a return, because else I take a risk without knowing what the return is going to be, and we can't do that. The odds are not in your favor. Yeah. Then record, evaluate. So you need to have a scorecard. What worked, what did not, because to strive for constant improvement, every trader, every professional has to go through a scorecard, seeing how did I do it best? When it worked fine, it works fine. But where do I have a need for improvement, where I can do better in the next step? Yeah, so you see already behavior, attitude, besides a system that gives you clear-cut entries, exits, and stops, is very important. And you need somebody, basically, to move ahead with that. Just indicators not going to get you there. We have wonderful indicators, but you will see we work one-on-one with people to condition everything to your individual wants and needs, add your best available days and times to get you over the hump, because making the behavior change from having a job, owning a job, or owning a business into being an investor, you are an investor or a trader, there's a big thing to get over it. There's some hurdles, and we'll help you over with the experience we have. We are in business since 2008 in the trading education business, and we helped some people over time to get very independent. Yeah. So back to the system, predictability. So your system has to have repetitive situations, yeah, to come over and over so that you can invest often. And you have to have a high participation rate. So if you want to trade often. So if you're a swing trader, you want to have a system that provides you a couple of opportunities every day, because you open and close your trades in between 1 and 5 days. And so you need new opportunities, but you only do what? You only invest if the opportunity meets your minimum condition. Yeah. And if it meets your maximum condition, home run. Yeah. So you're not hit for the next base, you hit for the home run. Yeah. You want to harvest it in. Rule-based trading, you see already. Yeah. No interpretation. Entry, exit, stop. Time in a trade, all of that has to come out. Leverage. How do we use leverage? Look, options, futures, forex pairs, that's all leverage trading, but also we can condition joint trades with stocks, with options, and there are wonderful opportunities that you might not be aware of, very strong in option trading and options trading strategies, and condition them together with the systems. Yeah, but all of this, what we tell you here, is what shall be in your portfolio. Yeah, so we're not showing you this to show what we do. These are all minimum requirements for a trader or investor to be successful. Yeah. Then when it works, what do? You reinvest, then you can do it again, and you can start to compound interest. Yeah, compounding interest is the wonderful thing that you can make, because if things work out, they excel what you do and they get you independent in trading. But as you see, it needs system, attitude, behavior. All these components come together. Why attitude? Yeah, because you have to be prepared, you have to be in the market when it's time, you can't be disturbed on those issues and points, to be yourself and to act as a trader or investor, because that's the big change. When you go to an office, your work comes to you as a trader and investor, your work, the analytics, and when they are met, you do something. You don't feel bad if you don't have a trade. You feel good because if you were in the market without your minimum conditions met, you're violating your rules. Yeah. And so back to the system has to give you clear-cut directions. And I give you examples. Yeah. So where's that asset going, up or down? What's anticipated? What do others look at and see? Yeah, because you see the industry is dominated by institutional investors, and they are bringing a lot to the party, and that's good. So that you see their behavior on the chart. If you have a good chart, a good system, it makes visible what the big money does, and you want to go with that, what you see on the chart that the institutional investors are doing. And nothing goes forever. After a certain point in time, the institutional investor or key money or asset holders will rebalance the inventory. So that means counter activities will come into play, and your system needs to consider those. Nothing goes forever. There's moments where, like this year was also very good, where we went forward, but for example, if we have a year where we go balanced, we don't move, you need a different strategy. But do you have that strategy? And you can wonderfully work it with leverage if you have it, and for how long do you stay in a trade? All of that has to come together with the clear-cut entry and stop. Yeah, risk, reward, and surely your positive exit. They need to play into each other and correspond, telling you when a trade is good, so you invest a little more, or when it's risky, you don't do it. Yeah, risky trades, stay away from, and I will come to that. And such a system then need to take real-time data, help you to distinguish signal from noise. What's that? Signal is, if it's clear, that is a confirmed trade direction, and noise is a random happening. There's a little spiff, price go up and down, do something, and we call it here algo in the background because we're an algorithmic house. The algo helps you to portray those on vector graphics, and I show you a lot of examples. Yeah, so clear-cut, entry, exit, stop. The moment you have to interpret with your system where the entry is, where the exit is, where the stop is, you're already out of the business, because you know we see with our brain will influence your action. That's not good. You need to be as mechanical as possible, feed your loop back, and do it repetitively again. And so system requirements. A system for you as a retail trader, and I as well, I'm a retail trader too, has to be giving you a performance above 65%. Clear-cut predictability, frequent trading, and clear-cut entries, exit stops. Yeah, is to say that often, and please, if you may, take a note on that. If that's not a given, you are behind and somebody else will take your money from the market. Yeah, so if you don't invest in education, you invest in the market, but the thing will be you might not have the knowledge or the ability to get back because money goes quick in that market. Yeah, the other side is prepared. You trade against the professional, and with good preparation, you can definitely be ahead. Let them make the analysis what's going to rise or fall, and see on your chart to trade along with the direction that they take. Yeah, and to do so, if you want to test the system, look at 20 trades, and we'll offer the participants from here also, if you want to come and say, I want to challenge your system, but please only do it if you're really interested afterwards, we'll give you an hour of working with us, and you call the assets and you call the time frames, and then we compare if we are getting above or at the 65% rate. Yeah, so that's an offer I want to make today, because then you strike a balance, but do it with every system that you have. Clear-cut entries, exit stops. Did it work out? 20 trades, 20 situations, then you know if you win 13, that's good. If you start to only have a winning of 10 and you aim for the 2 to 1 on all of that, those are big assumptions that most likely not going to happen in the future, and then you're behind. Yeah, so there's a statistical volatility, and you know it's a good way of trading. Say I take a little stop and I aim for the skies. However, you'll be stopped a lot of the time. Yeah. So what we found out through going through detailed analysis for a long period of time is the average risk to reward in a trade. Average, it's not always the case, is 1.2. So that means you need to give a 1.2 wiggle room to come to a 1-point target. So what does it mean in money? If you trade for dollars, often you have to leave a $1.20 wiggle room to stay out of the natural statistical volatility of an asset. Yeah, so that's important. Yeah, and when you do so, and we calculate a little bit together and say, okay, if I win $1 and I lose $1.20 at some trade, so what do I minimum have to have from a system? And I put it up quick. So your system has to have a probability to predict the future of 55%, and you break even. So you're not making money. This is why we try to shift everything and do beyond the 65% mark. Because on the other hand, not considered in that, you have trading costs, and you need to leave them below 10%. Look, there's many who try to trade a 2-minute chart on the ES. So we move $37.50 in value for one contract. You have $12.50 slippage, and you have $5 trading costs. No good. Yeah, so it's good for entertainment. It's not good for making money. Yeah, and transaction costs, slippage, and all of that has to come to a meaningful relation, in particular for futures, so that you trade for a minimum, yeah, because here are the slippage and round trip cost, and then your minimum is trade for, just a hint, $150 to $200 at minimum. So if the underlying asset is not going to move as a future of that rate, yeah, because many new traders like leverage products, it's not going to work for you, because you know your trading cost will be eating up all your profit, and if your system is not having the right predictability, you're behind. This is all little things, as you see, to be in your basket of goodies for going to the trading market and in your basket of knowledge. So therefore I encourage you to take notes on those, to then afterwards see that you have the ability to be successful in that. Yeah, so what you learned, 65% probability to predict the future, maximum 1.2% risk to reward, because when the risk is 1.6, what you do, you don't trade, and meaningful price moves. Yeah, not too little price moves, really. If you trade an option, the underlying asset or stock should move 70 cents to a dollar in the time unit you observe. If that's not the case, you'll be behind. Yeah. So we combine probability and reality now and go with you through some calculations. So average systems, do have 53% predictability based on moving average, MACD, or what all RSI and all these indicators. High probability starts at 65% and high performing at 70% predictability. That's possible, yeah, and it's still not a license to print money because you still have to put reward and risk in a good relation, and you'll need to perform consistently along with the trading system. And this is where we want to help you today to move ahead. Yeah. So then, futures trader, trade for minimum price move, meaningful. Consider 1.2% reward to risk, not at every trade, but that's your maximum condition. Yeah. So you don't take more risk. And you add commission to your target zone and keep them tight, because if you trade little things, then the commissions in particular add up. So here I did a little calculation scheme and says, look, if we trade as a futures trader for $200 with the 53% system and we do 100 trades, there you see the result on the right, yeah, and it's not exciting. Yeah, because you know you're coming up and making a $680 loss, making 100 trades, and you're not getting there. And a lot of you surely made that experience. However, if you do the same with a 65% system, 3 trades a day, you're starting to make money. You're not making exorbitant money, but you're making a super duper return in relation to what you trade for. And we'll go through a couple of instances in particular for futures trading where you can look and see how you can achieve those returns. Yeah. And when we do again a calculation here and say, okay, we move a little up, we have 55% system, but you just basically scratch, break even, and with the others, the numbers don't change. Yeah. So what does it all tell? Yeah. So you need to have trade what you see. Yeah. A system that shows it at ease. Yeah. No interpretation needed. Clear-cut entry, clear-cut exit, clear-cut stops or price adjustment levels, how we call them. Yeah. And no room for interpretation is important, because you know when you don't know is your entry there or not, most likely then because you want to trade, you're doing it and you're not doing it to clear-cut conditions. Yeah, so here we need to be as mechanical as possible to take out all the interpretation that might lead to a lower performing trade. So let us give some examples, and we go through stock example, and I show you a system first that is called NeverLoss Trading Top Line, and then afterwards I show you the introductory system to our firm, and that is called TradeColors.com. Yeah? And here you have a first chart. Yeah, so that's Facebook. Yeah, so we just recorded it yesterday. So what you see on the chart are indications where the system tells you, let us focus on that, buy or sell at certain points. And what you see here is also on the background, we have a predictor that based on the past, because a lot of institutions use that Facebook has a certain pattern to go into the future. And so you see here, so this is how we foresee the future with that pattern. And we also look at, is it a correlated trade to the overall market? Is money flowing in and out? I zoom in a moment. And is there something highlighted on volume? It does not always need high volume, but highlighted on volume where you see a lot of engagement. Let's dive into it and see how such a system is giving you entries. Yeah. So we are here between the end of September to yesterday when I recorded that. Yeah. So it told us here September 27, yeah, buy Facebook, go long in it, and here it says again buy it, and here again buy it. And what we also have with us is we have a clear-cut expectations of how far will the price move reach. So you see that here, until it sees what? Counteraction. So when you have that in place, you see your counteraction. So where was it here? Here we take some of those lines that are dragged out and say, okay, we would have traded to here, but we got another confirming signal on here to move that ahead. And here you saw, okay, into earnings. That's down there. There we had clear-cut expectation. Take your trade off if the dot is reached. Yeah, so does it make sense? Yeah, absolutely, because you know you wanna trade in the direction that we can achieve something, and you want to take your trade off when the happening is there. So at every place we know how far our price move shall reach, and we put it on the chart for you. And I'll give you other examples from for futures as well, and also other stocks, because Facebook might just be one of those instances where it worked, but it's not. We will have a repetitive pattern that we can here show with you. Yeah, so let us go and erase all drawings first, and then take back our pen. And so let's look at Apple. Yeah, so just very recently, so what you see here on the chart is Apple between mid of October till yesterday. And again, we'll take our drawing pen and we highlight those situations. So you saw here, oh, Apple had an independent move to the overall market. That's nice. Money is flowing in, has a blue cap, has an up, has a highlighted volume. So not only you, others engaging in it. And it tells you, buy me in case the price of the next candle goes above 163.60. Why do you buy above? Because you all want to buy cheap. We buy above because we want direction to be confirmed. And then it's spelled out here, you see it, except I'm a little deeper than that in my drawing, where to take out. So how long were you in the trade? 1, 2, 3 days, and you were out. Yeah, so you harvested on this. And that's what we call a two-SPU move, because up there we always see the SPU, the speed unit, bar by bar. We have an expectation of how far a price move shall reach. And with the top line system, we know that it usually reaches the first SPU in about 5 days and the second in 10. Then you know for how many days you are in, or bars, yeah, because we trade weeks and hours and minutes and all of that too. And then you see here we called, or the system did, the opposite price move. The low was taken out, was confirmed, and then we had the opposite price move to participate in. And you see here that was the SPU move here, basically getting us out again. And you see repetitiveness. Yeah, so that's again a daily chart for Apple. That is the top line chart. And let me take out my drawings and take the next example here. Looking here, okay, so what are we looking at now? Again, I see Apple here, but it's not true. This is IBM, yeah, just carried over the, that's here IBM. I just was wondering why the chart looks a little strange, yeah, so IBM, yeah, so that's it. We have a instance where we had here the call. Okay, so for going into earnings, get about to here, yeah, and after earnings, the first one, if we took us nicely down. The second short, and where are we now? So yesterday we had a call to the upside, but that had to be confirmed first today. So you see the instances are clearly formulated with the help of the red line. If you trail a stop there, you can trail your stop. Yeah, so that's there. So your stop's always with you. But also on the other hand, you calculate with every system how far a price move shall reach, so that you know from the get-go where to take your exit order. Yeah, where to take your positive exit, and that's important to move ahead and be a good trader or investor. Let us go and take some futures examples together. Yeah. And in those futures examples, I take the 10-year notes on a weekly chart. So, wow, man, who trades 10-year notes on weekly as a retail trader? So you might have never considered. Look, what is the maintenance margin of a 10-year note? It's about $1,200. It changes a little, but at the moment we have about $1,200. What you see here on the chart with the weekly chart is a couple of $4,000 moves to the up or the downside on there. So here, when you see that, it costs you $1,200 of your margin. And if you made that move, you have a $4,000 opportunity to harvest on. And here it goes the other way around, and you have clearly cut, spelled out opportunities to go to the upside or to go to the downside. And let us do one thing. Let us add them up together and see what worked and what worked not. And because, you know, no system is 100%, so that we cannot predict you that, but we can give you high probability. And with the high probability, we want to give you the opportunity to count it with us, yeah, to see at a certain point how many winners or losers did we have. So first one, yeah, it came to target, yeah, it showed you here, and with that we produced the winner. So why did we take that one? The first opposite trade we don't take, but the second. Yes, it's rule-based trading. Yeah, it's hard to put it all into a short presentation, but rule-based trading, bang. And again, you're in the trade, you're in the trade. Yeah, so this is all met conditions. This condition was met, and you saw exactly where the price started to halter. Yeah, so look at this. Price came down when it reached that second dot. That's a two-spool move. It has an 85% probability to not continue its direction. If you know that, you start to be a probability thinker. You start to be in the trade for winning it. This one, why didn't we highlight it? You will see it was not a winner nor a loser because the next candle didn't tick out the high. Direction is not confirmed. Here we lost. Yeah, so we expected the price to roll down, but it didn't happen, so we had a loser. But look at it. One winner, two winners, three winner, four winner, and one loser. So that's 1 out of 5. That's not too bad. So we are stating the high probability at the right stage. Next one is the winner to the upside. You saw here the signal picked, carried the trade to the upside, and this looks like little moves. These are $3,000 value changes. How long did it take? 1, 2, 3, 4 weeks. Yeah, but also how much does it cost you? It costs you $1,200 of margin engagement. Yeah, and I know that very many would like to trade that on a 5-minute chart, and the system will provide it. That's no doubt about it, but I want to give you different perspectives where you don't have to sweat that much for a good trade if the system provides it to you. Yeah, and so here again you have a winning trade in that what we call a change in command, because there was an upside signal not confirmed, and then afterwards we had a downside signal. And the first on the up we don't take, and we are happy. We are happy to invite you to challenge us in a personal session if you think that could be for you, where we go through all these details. Yeah. So now I had the long-term chart prior, and now I went ahead. Yeah. So that was the long-term chart here for the 10-year notes. And on the other hand, but does it also work for shorter time frames? Absolutely. To show you some of the results very recently for the ES, yeah, the S&P 500, the E-mini futures, and that's not an easy trade, but it has volume, it has everything that you want to have in being a good trader. And with knowing that, we definitely put it onto the example schedule for tonight, and here you see a trade development, yeah. November 14, I just picked out a day, and I will show you after. That's not just a day where it works. I took 10 days because, you know, what did I tell you prior? Challenge the system by looking at 20 trades, but to make the chart not too busy, I said, okay, the last 10 days into the event, we'll look together of how things work out. And let me do a couple of highlights with you on the chart here. So you saw here, right at the opening of the US day session, we'll had a short. Yeah, so nice. And the stop was here. Yeah, so it's on the basis of that candle. Could be trailed, but you know it went really fast to the downside. But see, this is 30-minute chart, and I highlighted here the day session only. So the overnight session is not highlighted, just for the day session. And bang, first trade and second trade. Yeah, so this is how you don't have to compromise. What do I do? Where do I enter? Where do I exit? So it's all on the chart for you. If you want to trail a stop, the red line helps you. This thing is called the NeverLoss Trading Double Ticker, and you have your minimum and maximum target to get out. Here you might say, but look, Thomas, it went deeper. Yeah, right, let's get greedy. Yeah, it went deeper, but also you saw what it did. Then it started to halter and went back, and might have taken you half of what your profit was at that point away. And that's what we try to prevent, yeah, because we know nothing lasts forever. There's always an action and a counter action in the market, because somebody has to rebalance the inventory, and then the rest of the market sold out of it, and we were part of it because it says here sell below that point. And here we have crude oil. Yeah, I said ES first, but we have crude oil on the 30-minute chart. Yeah, so and let's go into a couple of other examples. Yeah, so we'll take and erase our drawings first, and then we'll move ahead into a couple of examples around trade colors. Yeah, trade colors is our basic concept, and with that basic concept we trade when two newly same color candles are formed. Yeah, so very easy. So here, for example, you have two blue ones. If the high of the blue one is taken out, you trade to the upside. Here you have two red candles. If the low of the red is taken out, the second red, you trade to the downside. And we specify with you, that would be not part of that presentation today, where the stop is. It's a little bit above that low here or high here of that red candle. Yeah, and so let's see how that worked on the basis of the ES. Yeah, so I took here a daily chart, and I said, okay, how did the system perform recently? So what you have here on the chart is end of August till November 17. So I'll set myself down this morning and put the chart up for you. Yeah, and so you see how we were doing. Yeah, so there are the instances. We highlighted them in an orange box. Yeah, two blue candles, and the high of the blue candle taken out in the next. Yeah? And so then we have a time-based target. In that type of system, we trade for 3, maximum 4 bars, and we trade for a specific approximated price move and a specific approximated maximum price move. So that's what we have on here is 17 points or 27 points. So you know your min and you know your max at entry. We will work through in our sessions of how you can puzzle those together for your benefit. And then you see here that we were out of the trade and the next trade came up telling us go long and do that for 3 to 4 bars. So there was the entry candle, stop wasn't taken, it's down there. After 3 candles, we had no opposite trade, so we can go 4, but then we're out. Yeah, did we make what we were assuming to make, about this much? No, but we were out of the trade and we have another positive trade. And then afterwards, what happens? Most likely, if people didn't get out, then the stop would have been taken. But this is how we trade rule-based. The basic system, as again, doesn't assume that the price move takes forever. We trade for 3 to 4 bars at specific conditions, and then we are out. Yeah, so here's again a trade situation. Yeah, trade situation number 3, and 3 to 4 bars. That's the part we would have traded, and then we are out. So what do we do? Why didn't we do the participation in here? Because the system didn't deliver a clear-cut result, and also you'll see will prevent counter days like this. They most likely take everything away that you made, because the system will measure high probability for erratic opposite events. Yeah, so this was a bad red candle at that day, and then it turned around. But if you're a trend trader, you'll see you can stay in the sequence until the sequence ends in an opposite color candle. Yeah, so all of these were blue candles, so longs were prone. Yeah, and then we have 2 red candles. However, the low of the red candle wasn't taken out. No, yesterday then we'll move to the upside, and I did that early morning, so therefore you don't see the perfect day ending right now because I didn't put it on a live chart. But this is how your system gives you entries, exits, stops, direction over and over. And that's what you need. If you do it with our system, develop your own, buy it from somebody else, there you can leave no doubt in your action and in what you do. And we invite you in it. As said, if you're interested in learning this, I will make you a good offer at the end. Yeah, we are not a price-driven company, because working one-on-one, we put a lot of effort and a lot of knowledge in your development. And consider this, if trading was easy, nobody would ever go to work. We want to make it easy for you, but we'll have to train your brain to see on a chart what we see. Yeah, that's the challenge. Even so it's there, the key will be to have the right instruments. If you say, look, I don't want to trade this with the ES, futures trading is not my thing, can't I take a stock or whatever? Yeah, we show you how to do all these happenings with spider puts or calls, yeah, and put that in action for what we sometimes call a bottle of wine trading. So your minimum requirement is basically $50 of risk that you take. Yeah, so we can tame all these if you're not comfortable within trading a contract for a longer period of time. We can puzzle together strategies where you have minimums, and when you see that you can do this right, then you can put it together. Yeah, so we want to help you with this, and with that going forward, we want to do the following. Yeah, so we'll want to give you a couple of other ideas. Let me just take off the drawing. Yeah, so here you see it on ES, 30 minutes. Yeah, moving, and bang, the day yesterday, right out of the opening, you had your 2 candle color setup, getting you home and bringing you into the right direction. So that is not an instance that is a one-time wonder. You see here we put it on the chart, and we have multiple of those over the last 10 days. That's what I promised you prior. And there's a loss in it too, in the scratch, because we, at a certain period of time, we want to get out of a trade. So to bring that all together, we teach that one-on-one. We always have a clear-cut approximated price move for you on that. And we have opportunities finders. Yeah, we have watch list indicators integrated into the system scanners, and we also give you alerts that help you finding which of the assets are prone to make a move. Yeah, so this is giving you trading at the edge. We teach that one-on-one at your best available time, give you a business plan for trading success, and when we come together, we're going to work on those clear-cut opportunities, entries, exits, and stops. And one size doesn't fit all. So this is why we work together, build a business plan also in writing, so that you know what to do as a financial plan. What's your expectation? How many trades? Which returns? And what's your action plan? How do you prepare? What do you look at? How do you counteract? And so with that, we have specific entries, we have high probability, one-on-one learning, giving you a lot of service, and want to make you a special offer. What you saw here, top line, which comes with many indicators, seasonality, scanners, watch lists, and trade colors. These are the 2 system trade colors, the basic. We give you a special offer. Normally it's $9,997 for top line and 6% tax. We'll take the tax and all of that off, give you an offer for $9,500. It comes with 20 hours of training, all software installed for you. We'll pay the tax, yeah, because we're a Florida company, so we have use tax, so we'll have to pay it one way or the other. Or here, trade colors is $2,400, and so you save $246 if you come to work with us. How do you come to work with us? So basically, you have 4 hours and another hour which we put you in. The average hour is going to be like a $400 value to get you educated. When you want to work with us, give us a call at 866-455-4520, and you get everything here installed and ready for you, and we work with you one-on-one and make you a special offer. We very rarely discount on price, but we do it for Traders Talk, and I'm thankful they set it up for us. And here is how you can reach us. Office 866-455-4520, or contact at NeverLossTrading.com, and please also feel free at the webpage to sign up for our free reports and also our free webinars that we hold and our trading tips. Thank you very much for the host, Traders Talk. Thank you very much for your attention. I hope we could inspire you for something new, and we are ready to work with you or give you a 1-hour free consultation. Thank you very much again.